Alright, so gang, it's your boy NatureAkaNature. Alright, so we back for another video. Alright, so in this video we're going to be talking about what is Japanese candlesticks. Alright, what is Japanese candlesticks, how to read Japanese candlesticks. So these are Japanese candlesticks, as you can see. They can be used for any type of time frame, whether it's on the 1 hour, the daily, the 1 day chart, the 30-minute chart, the 4 hour, the monthly, the weekly. Japanese candlesticks can be used on any time frame. Okay, so they are used to describe price action during a given time frame. So this is how we understand price action and what's going on as far as price action is concerned. During any time frame, you can look and you can see Japanese candlesticks patterns on the 1 minute time frame, the 5 minute time frame, 15-minute time frame, any time frame, and they describe Japanese candlesticks, and there's all types of different Japanese candlesticks that we're going to explain in my OnlyFans. We talk and we go in deeply on all the Japanese candlestick patterns. And in these videos, I'm going to give you all a lot of Japanese candlestick patterns, the basics. In my OnlyFans, we go a little more in depth for the advanced sessions of the Japanese candlestick patterns. But these are Japanese candlesticks. All right. So as you can see, you're going to have a real body. It's going to have a body. This is called the real body. As you already know, this is called the wicks. You got the upper shadows, also called the upper shadow. It's the upper wick. This is the lower wick. It's called the lower shadow of the wick. Remember, if it's going up, it's going to open, and then it's going to close above. If it's going up, it's going to open at the support at the bottom, and it's going to close at the top near the resistance. Alright, if it's going up, if it's a green candlestick or white candlesticks, I use white and black candlesticks. Black would mean going down, white would mean going up, but most people use green candlestick, which means going up, and black candlesticks means it's going down. Red candlesticks means it's going down. So if it's going up, it's going to open at the bottom near the support, and it's going to close above. It's going to close near the resistance. Actually, this is what happens. You know, we already kind of ran through how to read Japanese candlesticks and how to read candlesticks, period. But for this quick video, we'll just go over it real fast. So remember, if it's going up, it's going to go down first, right? Creating this wick. This is the lowest session, the lowest of the session before it winds up going back up. So it's going to open, and then it's going to go down. It's going to create a wick, and it's going to go back up, go past that, go past the opening point, go all the way back up to the highest point of the session, which is going to create this upper shadow wick before going back down and closing right here. Okay, so this is how you have the wicks on here. This is how the wicks are formed. This is how the body is made. All right, same thing with the if it's going down. If it's going down, it's going to open at the top right here, and it's going to close. It's going to open at the resistance at the top, and it's going to close near the support. Okay, near the bottom. So if it's going down, it's going to open at the top, then it's going to go up, create this highest point before going back down to the opening. Then it's not going to close right away. It's going to continue going down, create this wick right here, and then go back up, creating this wick and close right here. All right. So this is how you read Japanese candlesticks. You know how they go up and down, and how the wicks are created. All right. We've kind of went over that already in OnlyFans and just period. We kind of ran over that already. So Japanese candlesticks are formed using the high, the low, and the opening and the close. And Japanese candlesticks can be used on any chosen time period. Shout out to the gang. If you close, if the close is above the opening, so it's the opening right here. If the close is above the opening, then it's going to be a hollow candlestick or display as white or green. depending if you know what colors you use. I use white and black. It's the same thing as green and red. So if it's going up, it's going to open and it's going to close above the opening. As you can see right here, it's going to close. It's going to close above the opening, and then it's going to create a white candlestick, usually displayed as white or green. Alright, and you already know how to read them. This is the upper shadow. It's going to open, make this higher wick. It's going first, it's going to open, go to the low, go back up, go all the way back up, make the next wick, then close right back down. Alright, so it opens near the support. You know, it goes down, a little bit down, then goes back up, closing near the high or near the resistance. So if the close is below the opening, so if the close is below the opening, then the candlestick usually is going to be displayed as black, shown draw here. It's going to if the close is opening, if the close is below the opening, it's going to open right here, go up, make a high, make a wick, go back down, go all the way back down, make a low wick, then close right here. So it's going to open at the resistance, and then eventually it's going to close at the support. Alright, this is how you read, basically we ran over this already though, but this is how you read Japanese candlesticks patterns, or just Japanese candlesticks. Now, there's a different type of Japanese candlesticks, I guess, so we're going to explain that. We're going to actually break down a few Japanese candlesticks and what they mean. Remember, the hollow filled section of the candlestick is called the body. So the square section is called the body or the real body. Then the thin lines poking below or above is called the high and the low range of the shadows, called the high and low range shadows. So it's the high shadow. It's the top of the upper shadow is called the high, and the bottom of the lower shadow is called the low. All right. So Japanese candlesticks. So there's different type of Japanese candlesticks. We're going to be breaking down. You can break down different parts. Break down the different parts of Japanese candlesticks. Remember, sexy bodies. Candlesticks come in, different body sizes. And some of them coming, the bodies of the candlesticks can be long. Some candlesticks bodies are long. Some candlestick bodies are short. The long bodies, they indicate that there's strong buying or selling. It could be a long body going up, or it could be a long body going down. Long body going up means strong buying. Long body going down means strong selling. All right, the more in tune the buying is, or the selling pressure is, the bigger the candlestick is. As far as the body is, the more intense or the longer the body is, the more intense the buying and selling pressure is of that candlestick. That means either buyers or sellers were stronger and more in control when you see long body candlesticks. That's what that means. Alright, so short body candlesticks imply very little buying or selling pressure. It's the opposite. They apply little or very short buying pressure or selling pressure. Okay, so you have long versus short. The long white Japanese candlesticks, or the long candlestick Japanese candlesticks, show strong buying pressure or strong selling pressure, and the short candlesticks show short buying pressure or short selling pressure. The longer the candlestick is, the whole candlestick is, from the opening to the close, indicates that the price increased considerably from the opening to close, and buyers or sellers were aggressive in other words, in that trade. Okay, and it was a big time reward. Okay, if the candlestick is a long white candlestick, it's going to indicate that if it's a long white or green candlestick, it's going to indicate that price increased considerably from the opening to the close, and it was aggressively, and buyers came in, and it was a big time reward for buyers. Same thing with with the long black fill candlesticks or the long black red candlesticks, it shows that sellers were strong in selling pressure, and the longer the black or red Japanese candlestick is from the close, the further the close is below the opening. So the further the close on going down is below the opening, this indicates that the price has fell a great deal from the opening, and sellers price has fell a great deal from the opening, right? And sellers were aggressive in that trade and were in control in that trade. So, you have the upper and you have the lower shadows, and then you have the real body right here. The upper lower shadows is right here, and this is the body. Okay? So that's basically how you read Japanese candlesticks. That's the 101, the basics that we were kind of ran over already. So that's actually diving a little more deep. Like, I already ran through some of these on our OnlyFans, but just for you guys, I'm gonna do it again. In our next video, which is going up on OnlyFans, all these videos are going up on OnlyFans, but I leave them up for you guys for a little bit. On the next video, you're going to see a little more advanced Japanese candlesticks in the next video. So let's continue with this video. So long shadows. So remember, the long shadows show that the trading action occurred past the opening and close. So Japanese candlesticks with short shadows indicate that most of the trading action was confirmed near the opening and close. So long shadows, this is a long shadow. This is long shadows right here. This is the shadow. This is long. So Japanese candlestick with long upper shadows indicate that, with short lower shadows, this means that the buyers flex their muscles, but price was bid back higher, depending on which direction it is. This means that buyers came in and created this long wick, but sellers wound up pushing price back down near the opening. So sellers are in control, depending on if it's going up or down, depending if it's on the top of resistance or downtrend. Same thing with this candlestick too, and we'll actually dive in a little bit, and so you'll understand which direction when these type of long shadows form with the body, with small bodies, what that means. So this usually means sellers are in control when it closes like this, and this usually means buyers are in control when it closes like this. It means that the sellers made the strong wick, sellers were in control, then buyers wind up pushing price back up near the opening, creating this body right here. So that's basically what that means. But for another reason or another, like I said, sellers, this means that sellers came in and drove price back down. You can see right here, but for some reason or another, sellers came in and drove price back down to end the session back near the opening price. So this buyers were in control. They were pushing price higher, and the sellers came back down, ending price near the opening. Okay, so sellers are in control. If a Japanese candlestick has a long upper shadow and short has a long lower shadow, and short upper shadow. So this is a long lower shadow and a short upper shadow. This means that sellers flashed near the and pushed price back down because sellers were in control, and then this means that eventually buyers came in, but for some reason or another, buyers came in and drove price back up to end the session back near the opening price. Okay, so I understand these how Japanese candlesticks work. So that's what this means. Okay, that buyers came in, sellers were in control, but eventually buyers came in and pushed price back up near the opening price. Okay, so I just want you to understand that. Now that you understand that, we can dive in a little more. Like I said, I already did these videos on my OnlyFans, but I want you to understand, you guys, what you're paying for. This is what you're paying for, the information. Um, you know, once you understand the information, you'll be good to go. So, you know, basic Japanese candlestick patterns. You have the top, you have the marbozu, you have dojis. What do they all have in common? Okay, they're all basic types of Japanese candlesticks. So these are all basic Japanese candlesticks. All of them they're just different Japanese candlesticks, but they're all Japanese candlesticks. Okay, so let's take a look at each type of candlestick and what it means in terms of price action. Okay, so when you're seeing all these candlesticks on they're all different type of Japanese candlesticks. Okay, and some Japanese candlesticks are are single, some are double, some are triple, which we get in the advanced sessions on my OnlyFans. Today we're just going to go over the basic Japanese candlestick patterns. Okay, all right, so we have spinning top Japanese candlesticks with a long upper shadow and a long lower shadow and a small real body. As you can see, the small real body, long upper shadow, long lower shadow is called a spinning top. Okay, it kind of looks like a spinning top. Spinning top pattern indicates that indecision between buyers and sellers. Okay, so it means that indecision between buyers and sellers. That doesn't really know what's going on in the market. It could be a possible reversal, depending if it's on an uptrend or a downtrend. If you see a spinning top usually on an uptrend, it could be a possible reversal for a downtrend. You see it on a downtrend, it could be a possible reversal for an uptrend. Okay, so remember the small real bodies, whether they're hollow or filled, it shows little momentum from the opening to the close, and shadows indicate that both buyers and sellers were fighting, but nobody gained the upper hand. Okay, even though the session opened and closed with little change, price moved significantly higher and lower, and in the meantime, neither buyers nor sellers could gain the upper hand, and the result was a standoff. If you see a spinning top form during an uptrend, this usually means there aren't many buyers left, and a possible reversal in the direction could come, like I just said, could occur in a downtrend. If you see it during an uptrend, you see it. If you see it during a downtrend, a spinning top form during a downtrend, this usually means there aren't many sellers left, and a possible reversal in direction could occur, and it could be going back up. It's an uptrend. So those are the basics. These are some of the basic Japanese candlesticks. These are all Japanese candlesticks, by the way, that I'm going to be explaining. So don't get confused. They're called Japanese candlesticks. Okay. So Murabozu is another Japanese candlestick. It means that there is no shadows from the body. It got its name Murabozu, translated from the word bald head or shaved head in Japanese. So a Murabozu candlestick is a bald candlestick or a shaved candlestick with no shadows or no wicks. Okay, depending on whether the candlestick body is filled or hollow, whether it's red or green, the high and the low, once depending on the Japanese candlestick, if in the body, the high and the low, which is basically the wicks, they are the same. They are always going to they can always be the same as the open and the close, depending. Okay, depending on the Japanese candlestick. For the Murabozu candlestick, who I'm about to show you right now, the Murabozu candlesticks usually don't have any wicks on it. It usually doesn't have any wicks. It's Murabozu because it's just a body. It's just a long body with no wicks on it. So Murabozu candlesticks right here. Check out the types of Murabozu candlesticks in this picture below. So remember, if it's going up, it's going to open. It's going to open at the bottom near the support, and it's going to close near the resistance. If it's going down, it's going to open near the resistance, and it's going to close below, near the support. Okay. With the Murabozus though, you see they don't have any wicks on here. They don't have any lower wicks or higher wicks. Okay, because the Murabozus, like I said, it got its name from being a bald or shaved Japanese candlestick, meaning it means that there aren't no shadows from this body. Okay, a white marblozle contains a long white body with no shadows or green, and it means that the price means it's going up. If you see it white or green, it means it's going up. And so for this, I use white and black. White means it's going up, black means it's going down. I kind of trade off of that because it's easier on my eyes. A white marblozle candlestick with no shadows is a white marblozle candlestick. The opening price is equal to the low price as far as like the candlesticks is concerned. This means that the candle is open at its lowest price and then closes at its highest price. It's a very bullish candlestick, means it's a very strong candlestick. When you see a marblozle candlestick, it means it's going up. It's a white candlestick or a green candlestick. It means it's a bullish candlestick. A green means bullish or white means bullish. It's a bullish candlestick that shows that buyers were in control of the entire session, and usually becomes the first part of a bullish continuation. And you see this on a uptrend, and you see a white or green marblozle form on the end of an uptrend, it usually means a bullish continuation. But if you see it form on a downtrend, it usually means that it's a reversal is coming. That the downtrend is over. And you see this bullish candlestick right here, this marblozle candlestick form on a downtrend. It usually means that it's a reversal pattern. It's going to form if it forms on the end of a downtrend. If it forms on the end of an uptrend, it's a continuation. If it forms on the end of a downtrend, it's a reversal. Okay, so same thing with the black candlestick. The black marblozle contains long black bodies with no shadows. It doesn't have no shadows or wicks on it. The opening is equal to the high and the close is equal to the low. This means that the candle opens at its highest price and it closes at its lowest price. This is a very bearish candle, as it shows that sellers are in control of price action the entire session. It usually implies as a bearish continuation. If it's on a downtrend, and you see a long black candlestick form on a downtrend, it's a continuation. Or a red candlestick form on a downtrend, it's a continuation. But if you see it form on an uptrend, it's a reversal. If it forms on an uptrend, it's a bearish reversal, and it means that price is no longer is in an uptrend and wants to reverse, and sellers want to come back in. That's what that means. If you see it at the end, it's going to be at the end again. It's going to be at the end of the uptrend. If you see a bearish reversal or a marblozle and it's bearish, meaning that it's black or red, and it's at the end of an uptrend, it's a possible reversal, most likely. But if you see a black or red candlestick and it's long and it's a marblozle candlestick shown in this picture, it's most likely a continuation. And sellers will continue to go in that direction. So depending on where the marblozle is located and what color it is, decides if it's going to be a continuation or a reversal. And here are the few guidelines right here. So if you see a white marblozle form at the end of an uptrend, it's a continuation likely. If you see a white marblozle form at the end of a downtrend, it's a reversal likely. Same thing with the black or red marblozle. If you see a black or red marblozle form at the end of a downtrend, it's a continuation likely. If you see it form at the end of a downtrend. But if you see a black or red form at the end of an uptrend, it's a reversal likely. Okay? So I just want y'all to understand the basic Japanese candlesticks. These are basic Japanese candlesticks that you're going to see. Alright, so we also have dojis. Alright, so doji candlesticks, the same. The opening, they're still Japanese candlesticks. But the doji candlesticks, their opening and close are the same, and the wicks are the same, but at least their bodies are extremely short. Some dojis have very small bodies and appear as thin lines. Some dojis just have thin lines. So doji candlesticks suggest that indecision or a struggle for third position between buyers and sellers. It's an indecision. That's what dojis mean. Price may move above or below the opening price during the session, but close at the very near the opening price. Neither buyers nor sellers were in control and result in essential a draw. There are four types of special doji candlesticks. The four types of special doji candlesticks right here: the long-legged doji, the dragonfly doji, the gravestone doji, and the four-price doji. We go over all of these in my OnlyFans. We go over all of them. So we're gonna go over it a little bit in depth right here. So the length of the upper and lower shadows can vary and result in 4S candlesticks. They can vary. It can look like a cross. It can look like an inverted cross. It can look like a plus sign. It can look like a minus sign. The word doji refers to both singular and plural forms. So when you see a doji form on your chart, pay special attention to the preceding candlesticks. If a doji forms after a series of candlesticks with long hollow bodies or white or black bodies, the doji, if it forms in a long white hollow body or a long green hollow body, and you see a doji form after that, it's a doji signals that the buyers are becoming exhausted and weakening. Okay, because doji means that it's indecision in the market. So you see a long white candlestick and then you see a doji form after that. On an uptrend, during an uptrend, it's a reversal is most likely to come. It usually means it's a signal that buyers are becoming exhausted and weakening. If you see doji form on an uptrend. Same thing if you see doji form on a downtrend, it means that sellers are becoming weakening. Like, we're going to explain that right there. In order for price to continue rising, this is talking about if you see a long white candlestick followed by a doji. In order for price to continue rising, we will need more buyers. We will need more confirmation. We'll need another like white candlestick or green candlestick like going up. But since there aren't any and we don't see any, sellers are licking their chops and looking to come in and drive price back down. So when you see this like a long candlestick followed by a doji, pay special attention to the preceding candlesticks. And also sometimes that doji isn't valid enough and price will continue to go up. But most times when you do see a doji form on an uptrend, sellers, it means a reversal is coming in. It means that followed after a white candlestick or a green candlestick, it means that buyers are exhausted and sellers are coming in and they want to push price back down and create a new trend, a downtrend. Same thing as you see a long black candlestick with a doji. Black means it's going down. So if you see a long doji form after a series of black candlesticks after a downtrend, which is a black or after a black Morobozo candlesticks, and Morobozo candlesticks can have small wicks. Sometimes they don't have no wicks; they just be the body. If you see a black doji form after if you see a doji form after a black long candlestick, it means that sellers becoming exhausted and weak, and that in order for price to continue falling, we will have to see another long black candlestick or some type of double or triple candlestick pattern, and we don't see that. So in order for price to continue falling, we would need more sellers to come in. But since we have this doji that formed after, this means that sellers are tapped out, and in the result, buyers are foaming at their mouth for a chance to get in cheap, for a chance for a reversal. So I just want y'all to understand is when you see this form on a downtrend, it's a possible reversal that price wants to go, buyers want to go price back up. And you see it form on an uptrend, it's a possible reversal that sellers want to come in and push price back down. Alright, so these are basically the basics of Japanese candlesticks. So while trying to decline price, the lack of sellers after the doji form, buying strength further, the buyer's strength is required to confirm a reversal. So just after you see this doji, they're saying that they need some type of confirmation, some type of candlestick that's going to reverse this candlestick. Buyers need some type of candlestick that's going to confirm that it's a reversal. So as you see, look for a white candlestick to close above the long black candlestick opening. So if you see a white candlestick in basically engulfing the black candlestick, which is called a bullish engulfing pattern, it means that price wants to go back up. In the following sessions, we will take a look at specific Japanese candlestick patterns and what they are telling us. Hopefully, by the end of this lesson on candlesticks, you will know to recognize different types of forex candlestick patterns and make some sound decisions based on them. All right, so this is just some of the basic candlestick patterns that I already went over in my OnlyFans, but I'm gonna do it again for you guys. Alright, so single candlestick patterns. Now that you are familiar with the basic patterns, the candlestick patterns, spinning top, Morobozu, Dojis, let's learn how to recognize single candlestick patterns. So here are the 4 basic single candlestick patterns. So you have the hammer, you have the hanging man. So the hammer and the hanging man, they look exactly alike. But they have totally different meanings depending on past price action. So both have a cute little body and it could be black or white, and both have a long lower shadow and short upper shadows, okay? Or basically it's short, very short, absent upper shadows. So as you can see in this example right here, they look identical though, okay? The hammer and the hanging man, they look identical, but depending on past price action, they are 2 different candlesticks, single Japanese candlesticks. So as you see, they look identical though, but one forms on the hammer, forms on a downtrend, and one forms on an uptrend. The hanging man forms on an uptrend. Okay, so I just want y'all to understand that so you won't get confused when you're trading the market and you're like, how is it going back up? I thought it was going back down. It created this hammer. So a hammer is a bullish reversal pattern that forms during a downtrend. It is named because it's hammering out at the bottom. The market is hammering out at the bottom. As you can see, it's hammering out at the bottom. That's why it's called a hammer, okay? Which means price is falling, but a hammer signals that the bottom is near and price will start rising again. Okay, this is what it means. The hammer is near and price will start rising again. Okay, when you see, so it's hammering out, right? Remember, sellers were in control, but buyers wind up pushing price back up to the opening. It's a bullish reversal, meaning that, also a hammer is a bullish reversal, meaning that price wants to go back up. When you usually see a hammer, 9 out of 10 times, it's usually going back up. When you see a hanging man, 9 out of 10 times, it's usually going back down. So the long lower shadow indicates that sellers push price lower, but buyers were able to overcome the selling pressure and close price near the opening. All right, it's a bullish reversal pattern. It means that it's a pattern that forms during a downtrend, and it's a hammering pattern that forms during a downtrend, and it's a reversal. It's a downtrend reversal, meaning that price wants to go back up. Same thing with the hanging man. Just because you see a hammer form during a downtrend doesn't mean automatically that you place a buy order. You need some type of bullish confirmation, some type of Morobozu candlestick, some type of bullish candlestick pattern is needed before you can just get in and pull the trigger. Okay, so typically the example of confirmation would be to wait for a white candlestick to close above the opening to the right side of the hammer. So as you can see right here, it's hammering out at the bottom, and for this is a reversal candlestick. That means that price wants to go back up, but for this to be recognized, you need a white candlestick to close above this hammer. Once you see this white candlestick close above this hammer, this means that it's going back up, obviously. So typically, to confirm that, we will wait for a white candlestick to close above the opening of the right side of the hammer. It will close above the right side of the hammer, and it will be a white or green candlestick, depending on what color your chart says. I use white and black. White means it's going up, black means it's going down. So we will wait. We will wait before we just pull the trigger and get right in, okay? Because sometimes price doesn't do that. Price can do whatever it wants. The market can do whatever it wants. So we will wait for some type of confirmation before we just got in the market. Same thing. The long shadows is about 2 or 3 times of the real body. It's little or no upper shadows. The real body is the upper end of the trading range, and the color of the real body is not important. But it's going to usually be, if it's a hammer, it's usually going to be a white or green candlestick, and it's going to be poking out at the bottom, and it's going to be creating a small body at the top. All right. Same thing with the hanging man. The hanging man is a bearish reversal pattern that can also mark at the top of a strong resistance level. You'll see this at a resistance level. It's hanging man, meaning you can see it's hanging. It forms at, the hammer forms at a downtrend. The hanging man forms on an uptrend, and it's hanging. It's a hanging man because it's hanging at the top. And once you see a hanging man form, it's a clear reversal pattern. You wait for some type of bearish candlestick. So you'll wait for some type of bearish candlestick to close below. As you can see, it's closed below the hanging man. After you get that confirmation, you know it's going back down. Price is going back down. All right, so hanging man, that's the hanging man pattern that we just seen. It's a bearish reversal pattern that can also mark the top of a strong resistance level. It shows it's a strong. It marks at the. It shows it's strong. It shows up at a top strong resistance level. When price is rising, the formation of a hanging man indicates that sellers are beginning to outnumber the buyers. As you can see, sellers are starting to outnumber the buyers, and we're able to push the price back to the same, but only near the opening. This sets off the alarm that this tells us that there are buyers left there are not enough buyers left to provide the necessary momentum to keep price from raising, raising in price. So, and I know I just told you that when you see this, it means that strong sellers were in, and they push price back at the top, and it's it's possibly going back up because the buyer wanted to pushing price back at the top. But when you see it at the top of a resistance, the same. Don't get confused from the hammer and the hanging man. They're identical. Okay, one means a reversal. When you see it form at the top, it means a reversal going down though. But when you see it form at the bottom and it's hammering out at the bottom, it means it's going back up. It's hanging at the top, it means it's going back down. So that's our two. Those are the two basic single Japanese candlestick patterns. These are single Japanese candlestick patterns. I showed you Japanese candlesticks. Now I'm showing you single Japanese candlestick patterns. And my OnlyFans, we go over double candlestick patterns and triple candlestick patterns. Okay? But for right now, we're going to just go over single Japanese candlestick patterns. Alright? So we got 2 more to go over, and then we're going to be done this video. Alright? So, the hanging man is a long lower shadow. Which about 2 or 3 times the size of the real body, little or no upper shadows. The real body is at the end of the uptrend. The color of the body is not important. It could be black or white. It does not matter. But if it's a black body and it's formed at the top, and you see it hanging at the bottom, and the hanging man is usually going to be black. Black is more for bearish, or red is more for bearish. White is more for bullish, or green is more for bullish. Alright, so the next 2 single Japanese candlestick patterns that you must know is the inverted hammer and the shooting star. And they look exactly identical, just like the hammer and the hanging man. Alright, so the inverted hammer and shooting star right here. The inverted hammer and the shooting star also look identical. The only difference between them is whether it forms on a downtrend or uptrend. The inverted hammer is a bullish reversal candlestick, and the shooting star is a bearish reversal candlestick. So both candlesticks have little bodies filled in and long upper shadows, and lower shadows. So they have long upper shadows now, okay, not long lower shadows. The inverted hammer and shooting star, they have long upper shadows, okay. The hanging man and the hammer have long lower shadows, okay. So as you can see, the inverted hammer and the shooting star, they look exactly identical. They have long upper shadows. The only difference is the inverted hammer forms during the downtrend and the shooting star forms during the uptrend. That's the only difference. But other than that, they look identical. Okay. The inverted hammer occurs when price has been falling, suggests that a possibility of a reversal is coming. It's a long upper shadow that shows that buyers tried to bid price higher. Okay. However, sellers saw that the buyers were doing that and said, heck no, and pushed price back up. Okay. But you can see, if you see this inverted hammer form during a downtrend with a long upper shadow and a small lower body, and a small lower wick, it means that buyers push price back up. Fortunately, the buyers have eaten enough of of their Wheatie for breakfast and still managed to close the session near the open. So buyers were in control and push price back up when you see an inverted hammer. Now, when you see a shooting star though forms. Still talking about the inverted hammer. Since the inverted hammer, sellers weren't able to close price any lower. This means that a good indication that everybody who wanted to sell has already sold, and if there are no buyers, there are no sellers left. And if there's no sellers left, then what's left? Buyers. Okay, so this is a clear single Japanese candlestick pattern that forms during a downtrend, just like the hammer. It's called inverted. They call it inverted hammer, and they both form during a downtrend. And it means that hammer means is going up, and inverted hammer means it's going up. Hanging man means it's going down, and shooting star means it's going down. Same thing with shooting star. Shooting star has a long upper wick with a small lower body. The shooting star is a bearish reversal pattern, though it forms during an uptrend, and its bearish means selling. So it's a reversal pattern that looks identical to the inverted hammer. Okay, it looks identical to the inverted hammer, but it occurs when price has been rising during an uptrend. It shapes the shape indicates that the price has opened at the low and rally, but pulled back to the bottom. Okay, this means that buyers attempt to push the price up, but however, sellers came in, wind up pushing price back down near the low. This is a definite bearish sign, since there are no buyers left because they all been murdered. Okay, that's what it says in the notes. This is a clear bearish definition. When you see a shooting star, it means it's going down. Okay, shooting star is going down. Okay, so those are the 4 Japanese candlesticks, single Japanese candlesticks. We can go over the dual candlesticks. These are dual Japanese candlestick patterns too. Okay, so these, you have single Japanese, you have Japanese candlestick patterns, you have single Japanese candlestick patterns. Now these are dual candlestick patterns. These are the double stick candlestick patterns, and you have triple candlestick patterns. Okay, so let's go over the dual candlestick patterns. You already know this, but we're going to go over it again. All right, so dual candlestick patterns. What's better than single candlestick patterns? Dual candlestick patterns. To identify dual Japanese candlestick patterns, you need to look at specific formation that consists of 2 candlesticks in total. 2 candlesticks in total. You need to look and find 2 candlesticks in total. There are the 2 candlesticks in total right here. There are 2 types of dual candlestick patterns right here. There are a few more dual stick candlestick patterns, double candlestick patterns too, but these are the basics. We're just gonna go over the basics in my OnlyFans. We go over the advances. We go over all the dual Japanese candlesticks, single candlestick patterns, and triple. So make sure y'all get that. Soon when it gets done, I'm gonna make sure y'all get that. Right now, I'm just going to give y'all what I can give you right now, which is the basics. So, alright, so there are two types of engulfing or dual Japanese candlesticks, which is the bullish engulfing and the bearish engulfing. These are the basic dual Japanese candlestick patterns. There are a few other ones too that we do touch on. So bullish means going up, bearish means it's going down, bullish means it's going up. So a bullish engulfing pattern is when, which you already know, is when the second candlestick is engulfing the first candlestick. The white candlestick is engulfing the first candlestick. The previous candlestick, meaning it's a bullish engulfing. And same thing here. Is when the second candlestick is engulfing the black candlestick. If it's a bearish engulfing candlestick, it means the red or black candlestick is engulfing the white or green candlestick. The second candlestick is engulfing the first candlestick. Alright, so bullish engulfing patterns is two type of candlestick reversal patterns that signal a strong up move may be coming. It happens when a bearish candlestick is immediately followed by a large bullish candlestick. The second candlestick is engulfing and bearish the first candlestick. This means that buyers are flexing their muscles, and there could be a strong up move after a recent downtrend or a period of consolidation. So you're going to see a bearish engulfing pattern during a recent downtrend. Okay, you can see it was a recent downtrend, and then eventually the bullish engulfing the pattern formed, and it's a reversal. It's a 2-day, it's a 2-stick candle reversal pattern. Okay, bullish forming during a downtrend. You're usually going to see a bullish engulfing form during a downtrend or consolidation, and you're usually going to see a bearish engulfing form during a uptrend or consolidation. All right, so that's basically it. All right. So gang, next video we're going to talk a little more in deep about Japanese candlesticks, and for my advanced sessions on OnlyFans, I do break down everything for you guys. So on the advanced sessions, we're going to be talking more and more about all the Japanese candlesticks. All right, so gang, it's your boy Nature, aka Nature. I got y'all. Stay focused, stay positive, keep going hard, stay motivated, don't give up. You got this. We're gonna make money in this market. I got y'all, gang.